Welcome back, everybody. What a week last week was. And as promised, I wanted to show everybody how my portfolio setup handled the big drop compared to just owning general stocks or any other type of mixture. So I tried to record this video twice over the weekend. It just did not happen. I had a computer crash and some other things happened. So I hopefully will get this up to you. So you'll just have to trust me on the numbers that I'm about to say. So the SPY, which is the S&P 500, which is most of the stocks that I own, reside in. So that's what I'm going to be benchmarking against. The 5-day drop was actually 11.5%. So we'll call it that. Almost 12% actually. So when it closed on Friday, we ended up at 296, which is pretty much where it is, but the drop was up higher. Can't really drag it out. So you have to take my word for it. It was about somewhere between 11 and 12%. And if I actually go over into my portfolio now, if this comes up perfectly, and I can take a look at the last week here, we actually were down more than this, about 6.4%. So roughly about half of what just owning straight stocks would have done for you. Now, to my surprise, if I jump back to the today's gain, the market's actually open right now. My biggest loss was actually real estate. I was not actually expecting that. So it was down about that 11 to 12% with the stocks, and I was actually down about 13% with the real estate. So I was surprised that that went down so much. If I do look at a slightly altered 1 week view, because we're already getting data from today, you can see here that's exactly what it showed. It was about 2% more down for my real estate holdings. Now, given today's performance, they're coming back faster than the stocks are. Very rare that I see a full green day, but we do like that moving forward. So what have I done? Have I made any changes? Some of them are due to outside of investing, but right now what I have done is I don't believe that this is a correction. I believe we are headed into kind of a sideways, stagnant, possible recession, and that's exactly what I've allocated all of my percentages to handle everything. So I'm going to give you my take on what's going to happen. So the first week is the first cut. We lost over 10+%. It's technically not a recession. We have to get about 18-20%, depending on what definition of a recession that you're actually going to listen to as far as the percentage drops goes. But this is the way that I see it. Today is going to be probably a green day, because if you look at the calendar, this is the first day of the trading day. So most people get paid on the first of the month, or the end of last month that happened to be on a Saturday. So that means all the money that gets funneled in for all of your 401ks is coming in today. So I am expecting today to be a little bit more on the green side, because the money is flowing in higher today. Now, do I see that as the rest of the week? I do not. I expect us to be going sideways or down over the next couple of weeks until we break over that 20% mark. And then what we're going to do is we're going to see, let's see if I can see any particular articles with the word I'm looking for. So what generally all last Friday you were seeing the words correction, dip in the market, those types of things. I don't believe that this is just a dip. Again, nothing is better. All of the economic data has been weak. We finally have an event that is causing everybody to take action. So 10% was taken off the board. I think they're going to be taking more money off the board. And I believe it was last Wednesday I was looking at all of my particular holdings. And out of every day that I've been tracking this, I've never had a day where all 4 categories were in the red at the same time. I've never actually seen that until last Wednesday. I was red all across every sector. The only way that can happen is money is coming off the table. I even went in and I double checked. I said, okay, let me check gold, let me check oil, let me just check the other major kind of defensive things that would be in there. And gold was down, oil was down, just literally everything was down. So when there's no safe place to move money to, that means money is going to the sidelines. So that is what I have my treasuries, technically my cash holdings. So that was kind of step one, is a big sell-off. Step two is people are going to be nervous right now, just like I'm sure you and I are both a little bit nervous that things are going to be going down a little bit more, but we're going to hold fast. We're not going to make any too big of changes. And what's going to happen probably in the next couple of weeks, there's going to be another big downturn. When that happens, now everybody is going to get scared. The word's going to change from correction to recession. Then people are really going to get scared. And then what happens now, the fear is in the market. The consumer confidence is going to be dropping, as much as that's worth anything. What will happen then is big institutions, once they've instilled that fear, they're going to change gears. They're going to go from bull to sell, to take money off the table. Then they're going to put it in reverse. Now they're going to go to short the market. They're going to start putting downward pressure on the market. And there's nothing that you or I are going to be able to do to stop them from shorting and pushing the market down. We don't have the billions to trillions of dollars to be able to move the market. So we just have to be prepared for what direction they are moving the market into. So I am hoping that my portfolio will stand through the test of time. Again, compared to the let's go back to the SPY. It was down about 12% last week. My overall portfolio was only down about 6.4%. So just about half of what a standard stock portfolio would consist of. Now, today is looking good a little bit. Real estate is jumping back a little bit more, to be expected. So we hope for that. I do see real estate and stocks dropping over the next month or so as that comes in. Now, the last kind of piece to this whole, if the recession comes, portfolio of mine will be the final step 4 is after everything's been shorted and there's no money left. That means all the money to push the markets down has been spent. They're not going to it's going to bottom out. And just like today, it's payday. The 401ks and everybody who's buying into the market, that money that's flowing in, they're not going to be able to offset it. And once that happens, you're going to see a very quick jump in the market. You might see that 10% gain in a single week because everyone's going to be covering those shorts. Once that happens, then we pretty much know we're not out of the woods, but if people are covering their shorts, that means we should be back to a stable market. So this could be a very long kind of downward spiral for the next 6 months, year, 2 years, however long it's going to take. It's going to take. Now, with that being said, I have changed my funding. I have dropped it from $20 a day back to $10 a day. I'm not stopping investing at this time, but as I'm sure I've mentioned in a couple videos, I have a new child. My wife is going to be home for a few months, not working, so her salary is going to be a little bit lower. So we also, if you watch my other videos with kind of net worth and being responsible with money and budgeting and all that stuff, if a recession does come, your best bet is to be focusing on paying off of your debts. So rather than investing money and just watching it lose or dwindle down, what you want to do is pay off the people that you're paying interest to. So I am cutting the investment down to the $10 a day, $50 a week, however you want to look at it. And then we also have kind of allowances that we pay ourselves for discretionary money. And we've also cut that back as well, since my wife is home and I've got a pretty good padded account for my own, we've just zeroed ourselves out. So we've kind of increased our money to pay down everything about $1,000 to $1,500 a month. And I know it's not very much stock related, but it is in the fact that if the recession comes, that's actually what you want to be doing. You want to kind of minimize your exposure. You definitely don't want to get out of the market. I never recommend selling. You always want to kind of just average buying your way down. But if you do have a car payment at 6%, if you have a home equity line of credit at 5-6%, if you have student loan debt at 7 or 8%, look at it that you're gonna gain that 6 to 8% for the next year if you just focus on paying down the debt, and you're able to throw, we'll say, $10,000 at whatever debt it may be. You will be saving yourself that 6 to 8% off of that versus putting the money in the market and then just watching it continually drop down. So that's my recommendation for at least the next couple months until we get some sort of positive news. You know, that production has started back in China, the coronavirus has a vaccine or a treatment, and it's on the decline, and we start getting some better outlooks from all of the companies. Then we can shift gears back to, okay, it's time, let's ramp back up the investments. I'll put my investments back to $20 a day. I'll have paid off more debt by then, and I'll have been buying going down the whole time. But again, we don't know if it's going to be a month, 6 months, 2 years. We don't know. So the best thing we can do is just average into the market. So that'll be it for now. Again, just one last comment is, this is now my third recession of owning stocks. I have lost money in the past two. The tech bubble, lost a lot. The Great Recession of 2008, lost a lot. And they were all due to life events. So my life event previously was buying a home, buying my first house. Well, it just so happened to happen right after the market crashed. I had about 50 grand set aside to put down as a down payment on the house. By the time I sold it, it was worth 20. So those big life expectancies, be a little more cautious. That's kind of what the whole positioning I have of this portfolio is. Hey, if I had this allocation of funds back then, how would I have handled? Well, I could tell you right now that 50,000 wouldn't have been worth 20. It probably would have been worth about 30 to 35, even if I sold at the worst possible time, which I'm pretty sure that I did, because that tends to be the way things happen. So with the birth of my first child, it's another major life event for me, which probably means, we could be very likely headed to a recession. I'll leave that up for the historians to dictate when the exact date of this is going to be, but it very well could be the start of last Monday, or you could even say technically the previous Friday. So that is all for this video. I've got to do a big monthly update for our net worth. We're going to go on some new features that Simple Bank has added, and some changes that I'm doing to the budget, and I'm going to also try to get an updated spreadsheet for you guys. I had a listener leave a comment requesting that I could update that, so I will go ahead and get that ready for the next video. Until then, dear listeners, I'll see you next week.